Monday morning, folks, and welcome to a brand new episode of FINMET Mondays. Marking the end of the first 3 months of 2024, we have with us back our usual special guest, Mr. Sunil Kashyap. I think it's a timely intervention, Sunil, because we really need your inputs to really understand and make sense of what is happening in the gold markets. You've been attending a lot of conferences and meeting up with a lot of people within the precious metals industry. But broadly, can you summarize what the sentiment in the market is? And especially last week, we saw a $40 run up in gold. What do you make of that uptick, basically?
I think I can summarize by saying that it's consternation plus happiness, because I think generally the market is happy that the prices have gone up so much, and it's always good for market participants in the bullion markets when gold prices go up so much and margins are really good. But overall, people are trying to figure out what's really driving it, and it doesn't seem to be any of the normal players within the market. If you look at either the COMEX positions or the ETF positions or physical buying, physical stocks, movement of physical, etc., there's nothing that explains such a big move up. So people are surprised. I think people are trying to attribute maybe this is coming out of Chinese demand, or maybe some demand from other unknown central banks. So people are still trying to attribute reasons to it, but overall, I think the market is pleasantly surprised by this move up. As far as Thursday's move is concerned, I think there are some indications that that may have been more of a momentum play. There's indications that some managed funds, some hedge funds have been buying, and I think they feel probably it's that on a technical basis, there's less resistance on the upside, so they want to take it up. So there was a good amount of contracts that were bought on Thursday, and since Friday, the market was closed, we haven't really seen too much of a resistance to that upside. So for this week that's coming up, it'll be interesting to see whether we start seeing some resistance, some selling. But right now, it's a one-sided market. Buy, buy, buy.
Definitely, definitely. We have some interesting events lined up for this week that might dictate what the near term price movement might look like. Let's look into the technical outlook and see how that might get affected as well. So, firstly, Sunil, looking back on Friday's data points, we see that core PC was the main indicator that came out. Largely from the PC inflation reading, the understanding was PC is still very much under control, and that is a positive sign for bulls going forward. I believe that will have some role to play when markets return this week on Monday. You are going to probably see a test of the first resistance, which is 2250. Here, we may see a correction after reaching 2250, or we might see a further extension in the bullish momentum to go and strike right up to the second major resistance, which is 2300 in the near term. 2300 resistance specifically is formed from this channel structure that you can see. So if you draw an ascending trend line from here, from a more longer term perspective, and you draw it from a more near term perspective, both of them are converging somewhere on the 2300 resistance. And that not only psychologically, but it also means that this would be a difficult level for bulls to kind of break as we are progressing and as we're kind of adding more gains to the metal from where it is already currently. On the flip side, the first retreat that we might expect gold to hit is 2200, which is the pivot. This is again another psychological on the downside. This is also where the 20-day EMA is kind of positioned. I was looking for divergence indicators in the price action charts just to understand if there is a possible of a retracement or a correction. But largely, all technicals are extremely strong. There is no momentum loss that I'm seeing largely. There are some mixed signals though, as you can see from the 14-day RSI divergence. The trend of this RSI divergence is decreasing, but your prices are increasing. So this is probably the only sentiment weakness that I'm seeing from a technical perspective. But again, this is just one singular piece. You need probably more technicals to kind of convey the same story for a strong retracement to take place. Looking forward, we have non-farm payrolls and unemployment rate for this week. Last month, unemployment rate surprised to the upside. Everyone was a little spooked by the high unemployment rate numbers, which came in at 3.9%. This month as well, we're expected the unemployment rate to remain unchanged from last month, which is 3.9%. If we see a move under 3.9%, you might see slight corrections because that paints the same story that the US economy is still very strong and gives the Fed more chance or more time to delay its interest rate cycle. So broadly speaking, this is the summary for the coming week. Thanks, Neil. Thank you for sharing your insights on the price outlook for this week. Let's see how the markets play out. But till then, thank you so much and goodbye.